Hey guys, it is Julie here with JT Wealth. In today's video, we are taking a look at two stocks that are trading at low prices right now, but that analysts think are a strong buy. So let's get into it. All right, guys, welcome back and thank you so much for being here. Like I said, today we are taking a look at two strong buy stocks that are trading at steep discounts. So in today's video, we are going to take a look at these two companies and what they do, plus what analysts are looking at for price targets over the next year. And just before we get into all of that, this is just your friendly reminder that if you enjoy today's video, make sure you hit that thumbs up button and leave your thoughts in the comments down below. Also, don't forget to check out some of the links I have down below in the description. I did just recently get an affiliate link for my favorite resource, TipRanks. Now, the free version of their website is extremely useful, but I do have to admit that the premium and ultimate come with some really great extra tools. So if you're thinking of upgrading, make sure to use that link so that they know Julie sent you. All right, now we're going to start off with a company that has over a 30% potential upside before getting into the second one, which one analyst thinks has over 100% potential upside. So that first company that we're taking a look at today is NiSource. They trade under the ticker NI and are currently at $22.70 per share. And these guys do pay a dividend with a current yield at 3.84%. NiSource is a utility holding company. With subsidiaries in the natural gas and electricity sectors, NiSource provides power and gas to over 4 million customers in Indiana, Kentucky, Maryland, Massachusetts, Ohio, Pennsylvania, and Virginia. Now, the majority of NiSource's customers, about 88%, are in the gas sector, and the company's electric operations serve customers in Indiana only. The company saw revenues in the third quarter come in at $902 million, which was down from $962 million in the prior quarter and $931 million in the year ago. Overall, however, revenues have conformed to the company's historic pattern. The second and third quarters are relatively low, while the top line increases with cold weather in Q4 and peaks in Q1, which is typical of utility companies in North America. Despite lower revenues, NiSource felt confident to maintain their dividend over this time. Not only that, they have felt confident enough to invest heavily into renewable energy. They plan on replacing 80% of coal capacity by 2023 with primarily renewable resources and retiring all coal generation by 2028. They have $1.8 to $2 billion of planned investment opportunities through 2023. This will create 11,000 jobs during construction and $2 billion in economic activity, and will see their greenhouse gas emissions to be reduced 90% by 2030. NiSource is working on its long-term utility infrastructure modernization program, and over the 2021 to 2024 timeframe, the company is going to invest in the range of $9.9 to $10.5 billion, of which 60% is set aside for gas infrastructure, 20% for electric, and the rest for that renewable generation. Now, the utility has a 100% regulated business model. More than 75% of NiSource's capital expenditure starts providing returns in less than 18 months of investment. The company reiterated its 2021 net operating earnings per share guidance in the $1.28 to $1.36 range and expects to see a 10 to 12% compound annual growth rate for the rate base through 2024. So this will drive its earnings per share, witnessing a 7 to 9% compound annual growth rate in the next few years. Argus analyst Gary Hovis says that this current low price gives investors an attractive entry point. He says that the NiSource shares appear favorably valued at 18.1 times our 2021 earnings per share estimate, below the average multiple of 21.6 for comparable electric and gas utilities. NiSource could also become a buyout target as larger utilities and private equity firms have purchased smaller utilities because of their stable earnings growth and above average dividend yields. He rates the stock a buy, and his $32 price target would imply about a 40% increase over this next year. And there are three other analysts that agree with Gary, as the NiSource stock comes in as a strong buy with 4 buy ratings. Now, the average price target is $28.75 per share for about a 26% potential upside. Along with Gary's rating, we do have a rating from a 5-star analyst at Credit Suisse with a $28 price target for about a 23% potential upside. Now, the second company that we're taking a look at today is Theravance Biopharma. They trade under the ticker TBPH and are currently at $17.94 per share. Theravance Biopharma aims to transform the treatment of serious diseases through the discovery and development of organ-selective medicines designed to maximize patient benefit while minimizing patient risk. Its current pipeline includes drug candidates for the treatment of inflammatory lung and intestinal conditions, as well as neurogenic orthostatic hypotension, and the research programs range from phase 1 to phase 3 trials. Theravance already has Yupelri on the market as a COPD treatment. Yupelri underlies the lion's share of Theravance's revenue, which in Q3 reached $18.3 million. This was up 47% year over year and was driven by a 124% increase in Yupelri sales. Of immediate interest to investors, we need to look at Trelegy Ellipta, which is GlaxoSmithKline's new once-daily inhaler medication developed as a maintenance treatment for asthma, which was approved by the FDA in September of 2020. Now, this approval will give Theravance a slice of the income on a drug with a broad potential audience, as asthma affects more than 350 million people globally. Theravance owns royalty rights on Trelegy, with income estimated at 5.5 to 8.5% of the total sales. Trelegy was initially approved in the US as the first once-daily single inhaler triple therapy for the treatment of COPD. Like many biopharmas, Theravance has very high overhead, and their recently approved drugs are just at the beginning of their profitable lives. This keeps the net earnings and revenues down, at least for the near term, and leads to a discounted share price, as their shares have slipped 32% over the past year. Covering the stock for Leerink, analyst Jeff Porges remains bullish on Theravance, mainly due to the combination of its robust pipeline and its approved treatment for lung diseases. Theravance's respiratory medicines are its key near-term valuation drivers. Now, he rates the stock a buy, and with a $35 price target would mean about a 98% potential upside over this next 12 months. And there are 4 other analyst ratings on the Theravance stock. It comes in as a strong buy with 5 buy ratings in total. The average price target is $33.60 for just shy of a 90% potential upside. Looking at our detailed list of analyst forecast, Alan Carr from Needham rates the stock a buy with a $40 price target, which would be about a 125% potential gain. So definitely some nice potential upside on 2 stocks that are trading relatively low right now. Of course, there is always risk when buying a stock that is already on a bit of a downturn. There is no guarantee that it will turn around and that these projections will actually take place. So always make sure that you are doing your own research and due diligence before taking on any new investment position, and that it fits within your risk tolerance and time frame. Now, you guys know that I love hearing from you, so be sure to leave your thoughts on these 2 companies in the comments down below, plus what other stocks you think are looking like a great buy at a discount right now. Keep in mind, these videos are never a suggestion to buy or sell any specific stock and are just meant to bring some new companies to your attention that you can then go and do your own research on. If you made it all the way to the end of today's video, make sure you hit that thumbs up and that you're subscribed to the channel as well. Thank you guys so much for watching. I hope you have a wonderful weekend, and cheers.